A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. It's SpaceX IPO week, probably the biggest IPO that the financial world has ever seen. Is slated for Friday. We're going to take a deep dive into what exactly to expect, and we're going to be covering that all week long because it really is a huge financial story, especially after the meltdown we had in the NASDAQ last Friday after the chip sector, the semiconductor sector, took an absolute beating. We got some ideas about why that happened. We also think that this SpaceX IPO is going to be a lot bigger deal than just a company raising capital. It really will be. I don't want to date myself too much, but I've been around a little while. And going back to 2012, I remember sitting there watching the Facebook IPO. I didn't trade it actively, but I was watching the price action. I watched the delays, the technical issues. I've written about it. I covered it in depth for years and years. And I always think an IPO is a spectacle. Think of the IPO as the Super Bowl here in the United States. We're looking for all sorts of surprises. We're looking for maybe the banks decide, the institutions decide they don't want to pay the projected price. At the beginning, we're going to be looking at delays at the market, glitches at the market. We're going to be looking at ticker symbol errors. Facebook went through all of this, and we're going to look for big rallies in value and then big pullbacks. It really is going to be an interesting deal, and probably it's going to be one of those streams that I'm really looking forward to doing. So we're going to have it live for you on Friday. Now, here's the kicker. I don't know exactly when they're going to begin trading, and nobody really does. That has to do with how fast they can get the infrastructure up and running in real time. It also depends on the institutions and the market makers, how they want to handle such a big financial event. But I'm always fascinated by a big-time show. I'm a sucker for a show. I'm the guy that buys the concert tickets because I want to see the big show, or that goes to the big game because I want to see the big game. Over the weekend, went to the world, supposedly one of the richest bareback competitions in the United States, a rodeo. I went there because I wanted to see the big show. So I'm a sucker I'm a rubbernecker. I mean, I really am. I just got to see it, and I'm really looking forward to Friday because these don't come around very often, but when they do, they're a lot of fun. So we're going to be covering this all week. I'm going to really line up exactly what we're going to be looking for on that Friday stream. We're going to be doing that Thursday afternoon as well, and then we're going to be diving into that early on Friday morning. So I think it's going to go live during the pre-market, but we're not sure. That's the beauty. That's the mystery of these things. And there's so much money. There's so much money at stake that it's going to be a lot of fun. So I'm looking forward to it. It's a big week in the markets. We're going to go over exactly what to expect. That's for sure. Jason Max, good to see you, Jason. Let me see. Tufi. Hi, everyone. Hi, Tufi. How you doing? Over there in the How to Trade community, Andrea Garwell. Always a pleasure, Andrea. Glad to see you back. Ralph H. Good to see you, Tuku. Yeah. Okay, guys. Let's start off with one of these pairs that I actually got word that this was being very heavily traded. And I'm absolutely fascinated because it is an exotic. We're talking about the South African Rand, Japanese Yen currency pair. South African Rand typically mirrors the price action in gold, not as much as it used to, but it definitely reflects gold price action. So today you see gold's up about 0.25%, holding its value, and you see a bit of a bump out of the South African Rand against the Japanese Yen. The Yen is definitely on everybody's mind. There's a lot of traders that are just trading the Yen almost exclusively right now, and a lot of that has to do with the BOJ really stepping up, looking to get very aggressive compared to the rest of the world. So when we look at a pair like this South African Rand, Japanese Yen, the first thing I always look at is I say, okay, what's the spread looking like? The spread's not bad, relatively tight. I'd say, okay, is this a tradable asset? Absolutely. You could be trading the ZAR Japanese Yen pretty much on any platform that you'd like. Of course, if you need to trade the ZAR, you could do it over switch markets. But this is an interesting type of a trade because we have the big sell-off that came across the board back on Friday, big rally today. So the real question is are we buyers or sellers? For me, I'm always interested in market structure. That pretty much is the name of the game in my book, and I use Fibonacci retracements. You guys all know that. But if you're new to the stream, the big thing I like to use a 13-period EMA with my Fibonacci retracements, and I always like to keep my Fibonacci's as current as I possibly can. So right here, this is a pretty good 3-week look at what the ZAR JPY has done. And for me, I'm definitely looking at maybe that spike low, building my Fibonacci retracement sequence there, going right up to our spike high, and you can see we bounced beautifully off of that 62% level, which is right around 961. So I'm watching this closely, and I'm saying, you know what, this is pretty good stuff. This is a pretty good trade. Those traders that are long, you know who you are out there. You crushed it. You had a very, very good trade. Now the question is do we go up? Do we go down? Where do we go from here? I would say that it's a tentative. I really don't want to throw a market call out on this pair for this week. However, what I do know is this: 961, 62% on that weekly chart. If we break beneath that zone, we're probably not just going a little bit lower. We're probably going a lot lower. So definitely have an eye on that if you're trading this Rand pair. And then also the 13-week EMA down there's a big deal right around 959.9. So a lot going on in this pair, a lot of action. If you do see that sell-off between that 961 level, though, get ready for bearish participation. In my next port of call, probably where I would be looking to bid from next, would be right down around that 955 area. That can give you a pretty good launch point for a decent long side trade in what I would call an exotic currency pair. Interesting stuff. Euro USD, I wanted to cover this one real quick before we get started with some of our discussion today on SpaceX. But a lot going on here. A lot going on. We've got the sell signal, 4-hour Euro USD chart. We were looking maybe to get that buy. That buy did not develop. The 9 did not cross over the 20 EMA crossover. This is a chart we referenced a lot last week. You see sort of that weave formation made life really difficult. But this sell signal is holding strong and compression. And then there's the break. The pullback is on 155 or 115.55. We failed right up there. And now we sort of sold off since then, 115.39. Fascinating stuff. Am I still a seller from 115.55? I don't think so. I think that Elvis has sort of left the building. That trade's over, and now we need to look at the next trade. Potentially for this pair, I would just sit tight. I wouldn't be diving in just trading the Euro USD. I mean, if you got the short, that's great. Fantastic. That's a significant move. You're looking at basically sells from 116.27. You got a low of 114.99, 115. So to me, the game now really becomes for the Euro USD. What happens between that 115.50 handle and that 115 level? That is a big deal. That area right in there is a big deal. We're setting up with a textbook L formation in the English language, sort of the uppercase L. That's very bearish. Definitely very bearish. So we're watching this one closely. If you want to sell 115.55s again, I probably would sign off on it, but I would be very careful. This was a really clean, really just a clean strike right there. High was 115.55 or 54.8. So it's right in that neighborhood. Big sell off from there, which is a really easy 16-tick scalp, 15-tick scalp. So something like this, be a little bit cognizant of it. Be aware of that 115.55 level, but the game is between 115.50 and 115. If we break beneath 115, we're going lower. If we do see this market maybe flatten out on a 4-hour time frame, and then we get that 9 EMA to cross over the 20, then we're going to be in business potentially for a midweek buy or something going into CPI. That would be absolutely fantastic. So I want to cover the Euro USD and that South African Rand, Japanese yen pairs to begin the live stream, because I know a lot of you out there are engaged in those pairs. And we'll just say a little birdie told me. But if you're interested in getting in on those markets, fantastic. Just watch your risk. Couple events to watch this week. Probably the biggest news week we've seen in a long time. And I'm going to go ahead and dive into it. We've really got a lot to cover, so let's get to it. Week 24, 2026, trading week 24. Big week, no question about it. Monday, weekend news cycle. Every Monday, as long as the Iran war is going to be a recap of what happened over the weekend. This weekend, we had a kinetic exchange between Iran and Israel. A huge ballistic missile attack from Iran on Israel, and then retaliations from the IDF right into the center of Iran. A lot of talk. Trump not happy. Had a big weekend with the media. Ended up breaking off a speaking engagement or an interview with a mainstream media outlet early. The tensions are definitely mounting on the Iran front, no question. Talk a little bit more about that in just a second. Tuesday, existing home sales. That's going to be a number that's going to bring a little bit of action to the market, but I'm not blown away with it being a huge market mover. Wednesday, U.S. CPI. I will have U.S. CPI for you live. We'll have our CPI live stream. It's going to be an early week for me. I'm going to be up early, seemingly every day, streaming at about 6 a.m. my time, 6:20 a.m. my time. So looking forward to it. Though CPI, huge market mover. We're actually looking for a little bit of positive news from this CPI report. I don't know how. Those are the projections, but that's exactly what we're going to be looking at there going into the Wednesday session. Also, Bank of Canada, BOC, gets involved Wednesday. Big day for the forex, especially the dollar CAD. So if you're trading loonie pairs, if you're trading U.S. dollars on Wednesday, be ready, because that is going to be the day. That's going to be the day when a lot of things happen. U.S. CPI, 5-star market mover, no question. BOC, Bank of Canada, Not really expecting anything out of the BOC. Still, the Canadian dollar is going to react. So we're going to be there for you on Wednesday as well. Thursday is the ECB interest rate decision. That's going to be an interesting one. We're looking for the ECB to hike interest rates by 25 basis points to combat really the spike and the rise in Brent crude oil prices and the impact that's having on the Eurozone economy. So when I take a look at something like the ECB interest rate decision, the first thing I'm thinking, okay, are we expecting any moves? Are any moves likely? This week, we're thinking we're going to get an interest rate move out of the ECB. So definitely Thursday, going to be a big session. We're not going to cover the ECB live because I probably don't want to get up in the middle of the night. Although I have in the past. We covered that the Trump announcement on the war in the middle of the night here. I don't necessarily know that I'm going to be doing that with the ECB. However, we will trade the fallout on our live stream there on Thursday. Friday, SpaceX IPO. This is a big one. We're going to go live during the pre-market. I'm going to give it about an hour before the pre-market. We're going to see if we can get any trading at all going before the opening bell ding ding and sort of set the stage maybe for what we can expect with SpaceX. We'll also take a look at also any other markets you want to look at, commodities, currency pairs, really anything, equities. There's plenty there on the plate for this week. So huge week. Absolutely huge week. As far as our news events today, pretty slow. This is a great day to use our Monday psychology. Most Mondays are slow. Objective is to trade into the positive. Don't go into a hole. Focus on our analytics. Get our game plan. And that's what we're going to do today. We're going to look at our levels. We've already outlined the economic calendar, the events that you need to recognize if you're going to be in the markets. So we've got our fundamentals are sort of game planned out now. Now we're going to start talking about technical levels to watch. We're going to get ready for the coming 5 days on the market, or maybe 4 days if your trading day's already over. But realistically, Mondays are great for game planning. Remember, we generate momentum on Mondays. We preserve it on Fridays. We generate momentum on Mondays. If that means taking some small profits, if it means getting out of the blocks maybe a little bit slower than you wanted to, but when you do, maybe taking smaller profits, only high percentage trades, that's fantastic. It's absolutely fantastic. So Mondays are big. They're key. I don't want to see anybody dig a big hole on Monday. I could sit here and tell stories all day long about going into the hole, thousands of dollars on Mondays. We don't need to go over those. Just remember, if you go into a hole on Monday, that means you're going to play defense the rest of the week, trying to get back what you lost on a Monday. When the best trades, from my experience, are Tuesday, Wednesday, Thursday. No question. This week, though, it's going to be an interesting one. It's going to be fascinating. So a lot going on there. Let's go ahead and take a look at our news of the day. Not much really happening here with regards to a real news event. We've got the 3 and 6 month T-bill auctions, which, we're up a little bit. Yields have ticked a bit higher. I think the 6 month T-bill auction is more more instructive on what exactly is happening on the policy front than the 3 month. The 6 month yields are up around 3.690, which is, up 25 points, not 25 points, but 0.025 week over week. That's a big deal because as we move forward in time and as the longer that the Iran war goes, the more we're expecting rate hikes, not rate cuts. We're on the precipice of a major economic turning, and these bond yields are really starting to bear that out. Take a look at the 3 month. This is a 3 month for the last 5 years. Now, you'll notice we're sort of flatlined right around zero coming out of COVID for about 2 years. The interest rates were ultra low. The government wasn't really interested in taking in money. It wanted to give out as much money as possible. I could write a thesis or an argument that the COVID era really did destroy the traditional fundamental finance approach to fiat currency, at least as it applies to the United States. Now, that's a long talk, but this is where we're at. We went from 0% all the way up to about 5 and 6%. That's when the government was really aggressively trying to tighten policy. Remember, the Fed can only do so many things. They can raise interest rates, but they could also discourage not necessarily anybody increasing the money supply. There's only a couple people that can do that. The Fed and the banks are one, and the government's number two. But when the government really followed suit with some of those rate hikes and jacked up these bond yields up to about 5%, 5.5% on, say, a 3 month T-bill, that really suggests that they are trying to get as much money out of circulation as possible. Sort of I wouldn't necessarily say a huge, monetary policy. We get into it and we can go down a rabbit hole all day long. What I would say is this, to keep it very simple. Anytime you see bond yields this high, the United States government's trying to raise money. Now, they're either trying to raise money maybe to fight a war or do something else, or perhaps they're trying to aid the Fed potentially in reducing that money supply and getting inflation under control. Could we say that these high bond yields worked? No, probably raised some money for the government, but it didn't stem inflation at all. So that's where we're at. You'll notice that the yields have come down just a little bit, but they're still holding relatively strong. Would not be surprised to see this 3-month T-bill go up over 4% if the U.S. Iran-Israel war clicks on for much longer. Be ready for that. Theoretically, those high bond yields, you're making that money supply a lot smaller. And when you do that, what does it mean? It means that your economy, there's not as much cash in there to generate that growth that everybody wants to see. So that's my spiel on monetary policy without going too deep into it and getting too opinionated, which we'll save that for Kevin Warsh in his first meeting, which is coming up here just in, about 2 weeks. All right, let me see. We got a question there on the How to Trade community, and then we'll get right back into price action. Ralph H., is there a way to tell if interest rate change is already baked into the currency pair? No, not really. Not really. What I would recommend as far as a rate, trying to price a rate change, look at our expectations. So like right now, let's say we're looking at the dollar CAD. That's actually a great place to sort of start talking about this, Ralph. If we're looking at the dollar CAD, okay, here's our 4-hour chart. We're sort of up and away right there. There's your big bullish uptrend. Let's just sort of knock everything down here. And what could we expect to happen if we don't get what the market is projecting on Wednesday? Market right now is projecting the consensus estimates, the Wall Street consensus. They're looking for the BOC to hold rates firm at about 2.25%, which is very low compared to where we are here in the United States, right? They're also pretty low compared globally. That's a long conversation, but the BOC, we're expecting to hold rates static. So if you're asking, is there a way to tell if it's already baked into the cake? I would say those consensus expectations are definitely already baked into the cake. So what we would be looking for is a surprise. If it comes in as a surprise rate hike, that would be something that would just absolutely send the Canadian dollar directional against all the forex majors. If we were looking at, say, something like a rate cut, maybe a real surprise to the markets, then that would also send the Canadian dollar really tumbling against the FX majors. So what we're looking for is a surprise. Consensus estimates already have that Canadian dollar, the BOC, holding firm at 2.25%. Any deviation off of that level will definitely bring huge volatility to the markets. So to answer your question, is there a way to tell if it's already baked into the cake? I would say look at your expectations. Now, I'm not saying consensus is always correct because that simply isn't the case, but like for our CME Fed Watch, very accurate, very accurate. I haven't seen a surprise out of the Fed Watch really since we started doing these live streams 4.5 years ago. So, and I've been referencing it for a long time. But that's the Fed Watch. That's different. Now, as far as Canada, to the best of my knowledge, is there a tool that monitors interest rate expectations? Not to my knowledge. Nothing that's traded like the CME Fed Watch is, but I'm not saying there isn't one. So you can do some research there. But as far as just what I would be doing, I'd be looking at expectations. That's what I would be looking for. And take a look at a few news services, Take a look at your maybe some of your economic calendars around. Take a look at some projections. Run some Google searches, maybe an AI search, and see what people are expecting. To the best of my knowledge, it's 2.25%, I believe. I could be a little bit wrong on that, but I don't think so. I think that's what we're looking for. As far as the dollar CAD goes, are we looking for any action, really? Yeah, there's going to be action. There's that movie, There Will Be Blood, There Will Be Blood. You will see the U.S. dollar, Canadian dollar move. And what we're really anticipating at some point is to get a pullback in the Canadian dollar. Now, we've seen a little bit of a pullback here. Not really a pullback, but we've seen a bit of a tempering of expectations in the crude oil market. Everybody's not just sitting around saying, 110, 125, 150 now. A lot of people that are trying to get views on YouTube are saying that, but there's really no evidence that we're going that high just yet. We had a renewal of the Iranian tensions over the weekend, and it didn't do much to spike our oil market. Still trading about 91.33. Very, very key thing that I need to show you about crude oil before we sign off today, about our rollover and how things are being priced right now. But the U.S. dollar is going up against the Canadian dollar significantly, and this has been an incredible trend. 920 EMA crossover right there was your buy back on the 15th of May. That's big. You bought in right around there, 137.45, up there to 139.50. That's a pretty good rally, about 200 pips. But now we're getting into an interesting range. We really are. We're getting into a key level, a big time zone right up there at our high, 139.66. And something like this is definitely something that I would have written down, 139.66. Definitely want to keep an eye on that. Big time swing high. ICT traders, smart money traders are going to say, yeah, that's a liquidity sweep. Okay, whatever. Whatever you want to call it, don't care. I call it the yearly high. I call it the yearly high right around 139.50. That's big, 139.75-ish. So be watching that level very closely. Right now we're printing about 139.57. Are we looking for that to be potentially a resistance point? Yeah, I am. I'm looking for a little bit of a pullback from that zone. Maybe we move higher, maybe we don't. But as far as what can happen from this level, potentially something like a daily inverted hammer. Let's say we got something to set up in the coming day or two where we get a test above this zone, and then maybe price closes back down. I mean, that's not the best hammer formation, but just think about an upside down T, something like that. We could definitely be looking at potentially taking a sell and getting in on a bit of a pullback. Right now, the market is bullish, though. Not really much reason for it. I mean, crude oil still is relatively high at about $91, but the strength of crude oil is not translating into any sort of love for the Canadian dollar. So that should tell us a couple of things. Number one, people expect the rate hikes out of the U.S. dollar later this year. And number two, they expect the Canadian dollar, the BOC, just to sort of keep rates where they're at. So it's an interesting dynamic right now, especially with crude oil up over 91. You would think that the dollar CAD would be a little bit, or the Canadian dollar would be a little bit stronger than it is against the USD, and it just ain't happening. It ain't happening. And the bottom line is this: markets are markets. There are more buyers for this pair than sellers, and that's all there is to it. Keep a close eye on 139.75, 139.66 is being a very, very hotly contested area, and I would say that that would be all because of the market structure. However, I wouldn't be holding shorts just yet. Let's wait for a test of that zone. Let's wait and see what happens price-wise, and then we may potentially be able to build a short later this week, maybe after CPI. So a lot going on here with the dollar CAD. I know it's a lot of folks' favorite pair, but this is really a big-time zone we're coming into. Should be some short-term resistance. We'll just have to wait and see exactly how it pans out. Bobby Bob, good to see you. Bobby, welcome. All right, let's see. Atham, good to see you. Atham, welcome. Fressy, good to see you. Fressy just got on. Hope you're doing well. I'm doing very well, Fressy. Still a little bit, throat's still a little bit sore. Did too much yelling at the rodeo the other day, but that's to be expected on a Saturday night, right? At the rodeo, you're going to do some yelling. That's for sure. Doing very well, though, Fressy. I'm confident everybody here is doing well. All right, Mohammed, can you explain how to use indicator volume on chart? We'll talk a little bit about the market profile here at the end when we execute a crude oil trade, crude oil futures. I will go through and talk about volume profile a bit, but honestly, the concept of volume is really hard because I can explain volume in about 50 different ways. What I will say about forex volume is it's not necessarily volume, it's tick volume. And tick volume is different. That means every time the tick moves, then we consider that a trade, and that's how the volume is determined. As far as volume goes, you want to be trading when the volumes are the highest. So when I'm looking at something like this, maybe on a daily chart, take this down to a 30-minute chart, this dollar CAD, you'll see this is tick volume, okay? So tick volumes aren't necessarily real volumes. However, you want to be trading when those volumes are the highest, and you'll notice right there, that's an opening bell in New York, ding, ding, and then that goes right through the London close. That's the London-U.S. overlap, essentially, that 2 hours. Typically with forex pairs, that's the most active that you see throughout the trading day, at least with the majors. So you're going to want to use volume, and that I view volume in that respect. And we'll get a little bit deeper into the weeds here, talking volume in a minute with our market profile stuff and WTI crude. But as far as volume goes, you want high volume, you want active markets, deep markets, good participation. And that'll give you an opportunity to be the most efficient you can be in the market. That means you're going to get filled properly. That means your spreads are going to be tight. That's what you're looking for. You don't really want low volume. If you see low volume, really thin markets, we call that a thin market. You have to avoid those because it's really difficult to get in on steady pricing moves. And also your spreads are bigger and chaotic. And typically the price action itself gets very choppy. We'll talk a little bit more about volume when we talk about oil today. I think that's a little bit easier for me to illustrate. You see right there, though, 30-minute chart right there, coming across the board on the London close, essentially. Dollar CAD, 30-minute 920 EMA crossover. The 9 crosses the 20, and we're off to the races. Fantastic stuff, that's for sure. All right, let's talk a little bit about our fundamentals of the day, and that's going to be SpaceX. I wanted to talk about SpaceX here and sort of set the table for what's going to be more than likely one of the bigger weeks in finance. And a lot of people are saying that this is probably going to be the best trading week we've seen in a long time, and it all really is predicated upon SpaceX and the success of this IPO, that's for sure. Let me see, Freshly. Which one or top 3 videos on your channel would you recommend for new traders? Let's see. If you're on How to Trade, the How to Trade Calm YouTube channel, I'll answer this question real fast and we'll talk SpaceX. Top 1 to 3 videos that I would look at. The first one I probably would look at to get started if you're looking for strategy would be 920 EMA crossover. Start with that. I also have a video in there on key levels on the How to Trade channel, How to Trade Calm channel. That's key levels. That's a good one. That's a really good one. It spells out how to trade horizontal support and resistance zones and how to figure out what a key level is. Those are huge. And then also over on the Switch Markets TV channel, Switch Markets on YouTube, you could definitely get in there and just start looking. We made a great one on the CME Fed Watch Index. Those are good. It's a good video. It teaches you all about monetary policy and how to read the CME Fed Watch Index, which if you're trading the US dollar, that's a big one. So I would say that's a bit more advanced, but those 3 are pretty good. But realistically, all of the content there is designed for everybody from beginners to more advanced traders. But those are probably the 3 that I would be looking at right now. And then I would come to live streams and ask questions. The problem with live streams is oftentimes people are busy, so you can't check these out live and watch and ask questions in real time. All right, let's go ahead and get to it. SpaceX. So what is SpaceX? SpaceX is a company basically created by Elon Musk, and it's sort of a spinoff of the Tesla family of companies. This probably won't be the last Elon Musk offering, but it could definitely be the biggest. It could be the biggest. So let's just look at an AI overview real quick. SpaceX IPO is going to be on Friday. It's going to be on Friday, June 12th, 2026. Ticker's SPCX. For the NASDAQ, target price is $135 per share. We're looking to raise a $75 billion, a cool $75 billion, and then the valuation is $1.77 trillion of the entire company. So essentially what SpaceX is it is the space exploration company of Elon Musk. That's what it is. And essentially it breaks down the new industry of private space travel, something that when I was growing up, you never even thought was possible. It just James Bond movies. That's it. And when we start talking about what could potentially stem out of this company, SpaceX, nobody really knows. And that's why a lot of the valuations are so high. That's why a lot of the valuations are incredibly staggeringly high. The company has priced its offering at a fixed $135 per share. So what's going to happen with this is Thursday night, they're going to start talking with the investment banks, the big dogs, and they're going to start submitting orders for this stuff based on their own strategy, how much SpaceX they want to hold. Now, whether or not that $135 per share is actually the price where we go to market with depends on how these institutions essentially make the market. So always remember with IPOs, I know it's complicated, and IPOs are really hard. Back in the 90s, back when I was back in college, that's all anybody talked about was getting into the next tech IPO. That's it. They just wanted in, buy it. That was the strategy. As soon as they were offered for trade, buy it. And you saw these massive appreciations of companies like Cisco Systems and Oracle and all these just giants of the industry, right? Sun Microsystems was another one. And these companies, and they went huge. They went supernova. And then the market started debating what they were worth. And then over time, the orders came in and we started seeing the financials and what exactly these companies were worth. And those values just jumped all over the place. No different than a crude oil chart or a gold chart, right? So an IPO day has the potential to be incredibly volatile. For retail traders like us, it's really difficult to get in when the pricing is sweet because we're not insiders. We don't have stock options, so we're not really employees of SpaceX or somebody that's going to get stock options that are going to make them instant millionaires. Okay, you're not going to get that. We're also not in the institutions, the Citibanks, the JP Morgans, the Goldman and Sachs, where they're going to be allocated chunks of the stock according to what their demand is, how big their appetite is. All of that is going to figure into the price. Now, the stock options, not so much. There's restrictions on the insiders of when they can actually dump their stock that they're given via the options, right? That's the first thing. So that action isn't going to be too huge on the first day, but the action from the institutions, they essentially are going to set the price of this thing, which may or may not be $135 per share. And then it's going to be released to the market. And when it's released to the market, that's when me and you start trading it. So it may be 135, it may be much lower, it may be higher. It just depends. We really don't know. One thing that does happen is you get extreme volatility in these IPO situations. There was a time when these things were trading 2, 3, 4x their projections on a day. It was I believe it was at Microsoft. I believe it was Microsoft had the greatest number of millionaire secretaries in the world because the secretaries took stock options instead of Christmas bonuses. Well, that all is going to play in to a lot of what we expect out of the SpaceX IPO. It's going to be a time of instant millionaires. It's going to be a time where institutions position themselves for the SpaceX trade over the next 5 to 10 to 15 years. And it's going to be a time where retail traders like me and you have to decide whether we're going to buy this thing right away or whether we're going to let this thing sort of settle down a little bit and figure out exactly what we need to do with our money to give ourselves the best chance at our own relative level of success. So, IPOs are exciting. The IPOs are exciting because nobody knows really what they're going to do. So essentially what you're looking at here, brokerage access, retail traders can apply for IPO share allocations through major brokerages. So basically you would have to contact your broker. If you're not allocated shares in the initial IPO, you'll have to purchase the stock on the open market immediately once trading commences on June 12th. So that's what we're going to be looking at. Now, they don't know exactly when this thing's going to go live during the trading day. We're going to cover it during the pre-market because there's going to be a lot of news out and a lot of people talking. Potentially, we could get some pre-market shares changing hands. I'm going to go ahead and bet that maybe we do, maybe we don't. I think it's going to open maybe during the trading day, and we may or may not be here for that, but I definitely will get you set up and ready to rock and roll with this IPO because it's a big deal. How to buy the SpaceX IPO on its IPO day. This is a pretty good article written by the Motley Fool. Feel free to get in there. It's set to go public. It could be the biggest public stock debut of all time. They believe that it's going to be, and you can see all sorts of things. 577 million shares, I believe, is what's going to be allocated. It's a pretty good float. You can see NVIDIA, who had its own recent high profile. Its IPO was priced at 185, but shares began trading to the public at 350. Remember NVIDIA? Well, there's more shares involved here with SpaceX. So this is going to be a lot of fun. I can't wait. I think it's going to be one of those deals that people are going to write books about. I really do. That's for sure. Let me see. Muhammad. SpaceX is strong, but I think it will drop after the IPO. I think that SpaceX is going to be one of those companies that we really don't know what's going to happen with it. And there's been a lot of talk, an absolute lot of talk about this. Google and SpaceX agree to put data centers in space by June 30th. This is something that could potentially really blow this market up. I mean, blow it up. This thing could go to almost, there's no top on it. So they're back about a few weeks ago, there was a 30% chance. Now there's a 7% chance that they're going to agree to put data centers in space. If SpaceX decides, or if Google wants to put data centers in space, if the government wants to put them in space, and SpaceX is the unique sort of exclusive provider, the ability to get that hardware into space, in something like this, maybe they don't announce it by June 30th, but maybe they announce it in July or August or September. Maybe they wait for the stock to have a lull and then announce that they're going to put the data centers in space. That could be the single biggest market driver that we've ever seen. It really could be, because right now data centers are hot. They want to build them everywhere here in the United States. If they can, in fact, build them to scale in space, without the public outcry that they're getting, without the fights over the real estate and the water and the resources, if that actually becomes a reality or even a speculative reality, that could drive the price of SpaceX infinitely higher. I'm not saying infinite dollars per share, but if you're the only one that's taking up hardware into space and you're the reason for the data centers being built, you have a tremendous amount of sway and a tremendous amount of control. I think that's going to be announced very, very soon this summer. I don't think it's going to come until you see a lull in that SpaceX stock, and then that'll be announced. And then there's partnerships. And then Google and SpaceX are partnering up. Whoever can get us built in space first. It's going to be really be the bubble of all bubbles. We're watching it closely. Tesla stock, the other thing that investors are thinking is, did Tesla and SpaceX ever merge down the line? Is it a situation where Tesla and SpaceX, even though they're sort of under the Musk umbrella, did they ever actually merge? Now, there's been a lot of people saying they're never going to merge. Well, nobody ever thought that Sirius Radio and XM Radio would ever merge, and they merged. If you see Tesla potentially providing some of its technology to help SpaceX, or maybe vice versa, there's no rule saying they couldn't merge down the line 4, 5, 10 years. Nobody knows what the future holds. That's why a lot of these institutions are going to be taking these positions. They're going to be taking positions thinking, does SpaceX become, does SpaceX and Tesla, do those brands become sort of the next Berkshire Hathaway, where sure, that's the basis of the portfolio, and then these companies begin acquiring other companies, and they build a huge cross-section of tech-involved companies that dominate the sector. It's very possible. It's very possible. In any case, last Friday was a big day. We saw just an absolutely huge day. For the NASDAQ, we sold off about 4%, 10% to semiconductors. Tesla took a major hit. Tesla took about a 6.5% hit. A lot of folks are really speculating and wondering why the US 100 sold off the way that it did. So I'll throw my 2 cents into the ring. I think that what happened was you have a lot of traders, a lot of institutions out there that decided they were going to, we want some SpaceX. Well, how do we get our hands on SpaceX? Well, we got to liquidate some stuff before we can actually have our full buying power, the purchasing power that they want to put in potentially to the SpaceX stock. So I know the narrative out there floating was, it was a semiconductor meltdown and everybody's worried about chips and the flow of chips, so they sold off the NASDAQ huge. I don't really buy that. I think that it was more along the lines of, let's liquidate some of our NASDAQ positions, take some profit taking right around 30,000, maybe take some of those 3 and 4x trades that they made, from the last 18 months and plug a lot of that capital right into the SpaceX IPO. To generate a move like this, retail traders, we want to feel like we're important and can generate a 5% sell-off, but we have to be realistic. There's only a few big brokerage houses that can create that kind of action in a market, and these were the big boys stepping up and selling this thing, and the NASDAQ absolutely crashed. 10% sell-off in the chip makers. As far as the NASDAQ goes, just a quick, we can do some quick analytics, I suppose. Very simple for me, buying dips, no question. There's just too much going on right now. Everybody says the end may be near and the top may be setting up. Okay, we'll see. Buy 27,750, no question. Maybe 28,000. That's a pretty good long as well. Right now we're trading about 29.5s, and we're starting to have some trouble there at 30,000. If you remember that 30,000 level, that was sort of lined up as our big key level. We'll take a look at what's happening. Huge rally, went and checked that level out. Now we've got two-way action. Now we potentially could have a big negative bar setup. It's early this month, but it's possible. We could have a big red bar setup right around 30,000, sort of suggesting that there is a bit of exhaustion, something real similar to what we saw maybe at 25,000, where we trade sideways for a while and then pull back before exploding to the top side. I think that very much could happen. Very much could happen. As of right now, I think bullish is still the way. A nice pullback down into this zone would be give us a fantastic opportunity to make a little money from a NASDAQ long. Keeping it very simple here, guys. Let's go to NVIDIA. NVIDIA Corporation, let's have a look. Absolutely horrible what happened to NVIDIA on Friday. You can see that, this stock is just absolutely cratered from those highs that were up around 236. Came right down. We talked a lot about this area, this gap area right in here. I remember it, right around 225, 228. Came right down, and then NVIDIA has the big sell-off last Friday of about 6.2%. Now we've seen a bit of a rally, but still sort of in red territory. We're up 1.5%, but price action has been negative since that open. So this is interesting stuff to me for NVIDIA. Let's go to a monthly chart and have a look. But you can see for me, it's going to look pretty much the same as my NASDAQ analytics. I know it's very simple and almost rudimentary, but rudimentary works. Simple works. 208, big zone. Could we see a sell-off down to 191? Yeah, 192, maybe 192.50, 195 buys right there in that golden zone. It's pretty juicy, somewhere right in there. You could wait for that pullback potentially and get great trade location. Really no reason to be bailing out of NVIDIA at this point. I think that was Friday's sell-off manufactured? Potentially. But something like this, do I want to be long from 208? We're right at that 38%. Maybe. It's not a bad buy. I'm not going to really tell anybody to sell right now. NVIDIA, I think everybody wants to buy the dips. But the SpaceX, believe it or not, is going to play on all of these stocks. They're all going to react to it one way or another. Tesla at 400. Let's take a look at the Tesla on the Fibonacci's. All-time highs right up there. Double top, right? Double top right around all-time highs, which are just short of what? 500. I can already hear you guys yelling out the big round number, the key number that is 500. So your all-time high is right up around 500, essentially 498, something like that. So you got pretty good stuff there in Tesla, meaning big key number, monthly double top, right? Boom, boom. You've got an opportunity potentially to revisit that level. I'd be shocked if we didn't. Still, though, right now, trading 410s. What is SpaceX stock going to do to Tesla? Is it going to have an impact? I think so. I really do. I think so. Low right down there, 382. That's pretty darn good. Trade location on the top side, 409.55, 38% on this monthly, this 2-month range. Not a bad long entry either. But could you be in for some short-term turbulence? Absolutely. Tesla is going to be volatile as SpaceX launches, and that's no pun intended, but that's just sort of what we're looking at. So looking at a few of these stocks. Dollar yen, this is one that I got asked a couple private questions about. For me, the game's pretty easy with the dollar yen. These are the two levels you want to look at. 2026 is high, potentially topside resistance at 160.72. 2024's high is right up there about 160.195. So 162 and about 160.75. That's a pretty serious zone of about 125 pips. I do believe we can break out of this zone and really rock higher. If we do break above 162, I would start thinking 165s, things like that. Hope, good to see you. Hope, welcome. You could definitely get something like that going on a top side breakout. For me right now, bullish, and there's no real reason. The fundamentals elude me. They really do. But if you're looking at maybe a 4-hour chart, it's a little bit tough. I mean, this is tough stuff. These are long tails. You're getting compression. That's pretty good volatility. What do we want to do? Do we want to buy in or do we want to sell it? I don't want to do either. I want to back off and let my fundamentals, my long-term technicals take precedent over my short-term price action. So I'm watching closely. Potentially we could execute a sell maybe right up there, right around 160.75, maybe get a pullback from that zone. But as far as what I would be looking for to happen in this market, this right here has me a little concerned. We've traded sideways for almost 3 months, and now we're breaking out. If we do break above this 2026's high, which it looks like we're going to do, if we break above that zone, I expect an immediate rush. I expect a rush up to about 162. So I'm not really interested in shorting. You can short right in front of 160.75. Just stay conservative with it. You're looking for 20 pips. You're looking for 25 pips. We need to be more patient because we want to see what happens at this level as opposed to trying to speculate on what we think will happen. These are big levels. 2026 is high. We're in the 6th month of the year. That's a 6-month high. That's a big deal. 2024 is high. What is that? A 24-month high. That's a big deal. So those are the levels that we want to look at. 162 more than likely is going to be a catalyst that will bring the Bank of Japan to the table, potentially to make a policy move to try to support the yen in some way. Maybe it's a 1/4 point rate hike. Maybe it's a half. Maybe it's a point. Maybe they try to unwind their balance sheet. Bank of Japan, they're pretty astute folks when it comes to monetary policy and keeping the Japanese economy moving forward. We will have to wait and see what they do, though. But rest assured, when the dollar yen hits 162, somewhere up in there, get ready for the headlines to start popping, because that's exactly what we saw the last time and really prompted this big bearish liquidity sweep right there. So you're going to want to do that. Let me see. Steve, 5. All right, I'll give you 5. I'm not really sure what 5 means. But, 500. I asked what the key number was. 500, absolutely. And Tesla, gotcha. 500, no question about it. That is the big dog. Okay, we've got a lot still left here. We're going to go over a few things. I wanted to do a little scalping here on our MT5 platform. We just haven't got any trades. I've got Ethereum and Bitcoin up. Still a lot of action in these. Ethereum is really, really falling out. I mean, it's falling on hard times. You're looking at valuations beneath 2,000, really closing on 1,500 per ETH. That's not good. Bitcoin right now, Bitcoin sort of consolidating right above 60,000, right around 63,000. These are 5-minute charts. I was looking for maybe a trade potentially to develop here during our live stream. I don't think we're going to get it. We need to go beneath. This is our 9 EMA trading strategy. We've got to see that trade beneath our RSI and then get a bullish close back up above our 9 EMA. That would be a pretty good way to approach trading this. Right now, you can see Bitcoin up about, 2.30%. Not too bad on the day. And Ethereum up about 3%. So you've got some pretty good price action here when it comes to Ethereum and Bitcoin. Those are depends on the time frame. If you're on a 24-hour time frame, they're up a little bit. If you're looking at maybe if you're looking at a session time frame, they're probably down a little bit. But with regards to this chart and this price action, you can see the selling is real. I mean, we've been trending down here for a while on a 5-minute chart. If we wanted to go to a 1-minute chart, maybe something like this, potentially we could build a trade. But I just don't think we're going to get it today during this live stream. We got to get beneath that 30 level so we can look to buy the market And maybe we get a late day buyback, but the market's just got to move a little bit more, or we're not going to get an opportunity to trade this 9 EMA. If you have any questions about the 9 EMA strategy, I have a bunch of materials on that. We've got videos on our How to Trade Calm YouTube channel. We've got an entire trading pack, strategy pack that's available over at Switch Markets. So if you have any questions at all and you want the 9 EMA strategy with custom EA and all the bells and whistles, just feel free to reach out to me, and I'll make sure that you get the link and get everything you need to get set up and rolling with that strategy. It's not a bad strategy. If you know how to trade it, you can make it go. You really can, but there's a little bit of nuance there, and we talk a lot about the 9 EMA. All right, let's go ahead and wrap this up with just sort of a little bit of a talk about Iran, and then we're going to dive into, we're going to go ahead and close with gold and then crude oil, see if we can get a trade on crude oil potentially at the end of the session. The Iran war kicked off again over the weekend. Officially, we're still under ceasefire, but let's be honest, things are escalating. You can see the pictures. Tehran calls off attacks on Israel, warns not to hit Lebanon. Right now, it's pretty much all about Israel, Lebanon, Iran wanting the proxies, the Hezbollah proxies and things protected under the ceasefire, and clearly that's not going to happen. It doesn't look like. Netanyahu acknowledges halt in fighting, but with Iran, but vows to respond with force to future attacks. So, I mean, we're just basically taking a break. We're just taking a break. Right now, you can see, I mean, these are the things that are really affecting anything. Airline fuel costs jumped 78% in the past year. I mean, if you've gone and priced airline tickets, they're about 25 to 30% heavy right now. They really are. They're pretty expensive. Iran says attacks halted as Trump tells Iran and Israel to cool it. Immediate ceasefire. Is that going to be the case? Is that going to last? We really don't know. We just don't know. There's a deal's on, a deal's off, a ceasefire's on, a ceasefire's off. I'm almost tired of talking about the situation. I really am, because what happens is we start getting into just circular discussions about what could happen and what will happen. Nobody knows. I mean, the bottom line is nobody knows. I don't know. I really don't. Here's what I do know. I know that the Strait of Hormuz is closed. No matter what anybody says, you can look on the satellite trackers and see all the boats there. The oil is not flowing the way that it was through the Strait of Hormuz. So that's the biggest thing, and the biggest truly the biggest factor out of the Iran war is the Strait of Hormuz. The rest of it, the humanitarian costs, the surprise terror attacks, the bombing of the Kuwaiti airport, all that stuff does not seem to be moving the markets at all. The markets have grown accustomed to the kinetic strikes, especially over the weekend. I mean, WTI crude oil should have jumped. It should have jumped big today, and it did not. It did not. Now, there's a couple reasons for that. I'm going to go ahead and go over them right now, but that's a good look at let me see, what is that, July WTI crude oil futures right here. You can see exactly what's happening. We've sold off during the U.S. session, still up about 0.5% on the day. Big picture, what does all that mean? Well, I mean, it means that the markets are used to it. They're used to the strikes. This is big, though. If you are trading WTI crude oil, be very careful. We are in rollover right now. We're still trading July 178,000, that volume. We sort of talked about volume earlier today. The lion's share of the trading volume is on the July contract, which means that your CFDs are still tracking that contract. For instance, U.S. oil is right there at 90.89, which is right on a WTI crude oil futures contract. Why? The front month. That's known as the front month contract, and it's the front month because that's where the volume is. That's where the people are trading. 102.33, though, that's creeping up fast, and that's August WTI. And you'll notice that the August WTI is priced about, what, 50 or a dollar, about $1, $2? $2 at a $2 discount over what we're seeing from the July contract. So that means that as we might walk forward in time, the futures contracts, the futures traders are really looking for this situation to settle down and WTI prices to come off in a big, big way as we move forward into 2026, the second half of 2026. So I'm watching this closely. I think that volumes, when it comes to volume and WTI crude and commodities, they're very important that you know where the volume is. Right now, we're pricing WTI crude oil as it relates to July delivery. And then after July, you can see we're creeping up into August delivery, and you'll notice that the price is really coming down over time. That means that the market does expect this thing to be resolved probably sometime this summer. Will it be? Who knows? Absolutely difficult to say. Okay, this is our market profile, our time price offering charts. You can see our point of control during that overnight session, sort of your London session there. You see it was way up here, POC way up here at about 794.44. During the U.S. session, it is this line, and it's beneath your lower value area. So you've got sort of a value area setting up down here, which is right around 91.50. So we're trading about 90.97, something like that. And this is sort of the U.S. session in a nutshell, very compressed, very, very difficult to put our finger on what's happening. One thing that I would highlight, though, in the coming, I would say in the coming hours, especially if the news cycle and the war kicks off again big, this isn't a great B formation, but it is a B formation. So what a B formation is, there's a lot of trading up here, and now there's a lot of trading down here, sort of a little void there in the middle. So if I was going to be looking to trade potentially early in the Tuesday session, one strategy simply would be to bid the market somewhere down here, sort of in this lower section, and stop myself out somewhere beneath the daily low, looking to get a retracement, maybe back up into the guts of today's range. And I think that's very possible. I really do. The only problem that I have with doing something like this, a market profile play or a time price offering trade, is that volume is split. The volume is split, but it's not split totally, but it's still only about 60%, 66% on July over August. As that gets closer to 50%, the trading gets really tough, especially with like market profile when you're depending on those volumes to give you the footprints of where the traders have made their commitments. It gets very difficult. You need volume. I guess that was the easy answer to the question from earlier. Shane, what do you think of volume? You need it. The more volume, the better. The more volume, the better. All right, let's see. We have a question here. No coup. Good to see you. No coup. Hello, sir. What is your take on gold? Read my mind. Great minds think alike. Let's talk gold. Gold, we had just an absolute brutal trade. And I mean a brutal one last Friday during U.S. non-farm payrolls. It was one of those where I did tout the trade, and I said, you know what, this is going to be an absolute banger from about 44.25. What I do want to highlight here is how we executed the trade. You guys remember it. There it was. Right there, 6:30 a.m. That right there was your NFP. That was your U.S. non-farm payrolls bar right here. We entered the market somewhere right in here, 22.50, 25, whatever, somewhere in there. I don't remember the exact entry. It was right above our support zone, our long-term support zone. Now, the beauty of it and why we weren't the dumbest people in the world is we cut this thing off right in here. Now, at the time, it hurt, because we saw the big red numbers come up and go, oh, man, we lost. Why did we lose? But take a look at how much money we saved. I mean, I'm sorry, but there's no such thing as moral victories in the markets. You either make money or you lose money, and that's really how I've handled my career, and that's how I view it. It's a simplistic approach, but I mean, the scoreboard is real. You either make money at the end of the day or you lose money, and if you lost money, you lost. Now, was your loss a good loss? In this case, if we tried to ride out that negative pressure in that move, we got destroyed. That's the difference between taking a manageable loss and coming back and fighting tomorrow, as opposed to going, oh no, I'm bankrupt. Oh no, I blew my account out. Oh no, the market didn't come back to me. It should have come back. And this is one of the things why, I don't want to go too far down a rabbit hole here, but this is one of the reasons why a lot of your signal providers out there that you work with, they'll tell you, okay, there's your bid. And then the market will go against them. They'll say, okay, let's buy some more here, and let's buy some more here. Because in buying these areas, as the market goes against you, your entry point keeps coming down and down and down. And what they'll say to you is they'll say, well, the odds now, I mean, we loved it up here, we liked it up here, we love it here, right? So now the odds of us getting just a return back to our entry point are really high, and we have a chance to win. Don't do it, because sooner or later, if you do that religiously, sooner or later, this happens. And you don't have enough money. You do not have enough money, because in a perfect world, if you're bullish gold, you just go, okay, well, if price goes down here, I'll buy. And then I'll buy some more, and then I'll buy some more. And your entry point will just keep creeping down. And you'll be waiting and waiting and waiting for the big move. When you finally get the big bounce, and then it's going to bounce up, and we're going to make all this money, tons more than we ever made before. The problem is, and odds are, you're going to get into what I call a sweep, and the market's going to get swept. And when it gets swept lower, you're going to keep buying, and you're going to keep buying. You don't have enough money to do that. Eventually, you'll get into a market where it won't turn. And you'll be destroyed. You'll be smashed. You'll be knocked out. We don't have Warren Buffett money. We don't have Jeff Bezos money. We don't have Jamie Dimon money. We have some capital resources that we have to preserve, and we have to use them to fight intelligently. Not just, I'm going to buy and turn this market. I'm just going to keep buying. It's going to go up, right? Now, if you want to do that with stocks, or if you want to do that with physical gold, I don't have a problem with that, because those are investments. Those are trades where you're going to be in there for the long haul. But when you're talking about trading derivative products, futures, forex, commodities, CFDs, whatever, if you're trading those derivative products, sooner or later you're going to run into the buzzsaw, and the buzzsaw has no mercy. And you don't want to get into those trades. Those are trades where the people, they wind up on window ledges. So let's have a look at how we would be trading gold from right now. We already know our key level. Our key level's gone. I'm bearish at this juncture. We do have a moving average down there, a 13-month EMA, right around 41.95. Yeah, 4,200, 100%. That's very, very good downside support. Do we want to sell right now? I would say yes. Because our sell popped in. We broke beneath our key level. We traded beneath last month's low. I talked a lot about that last Friday. We traded beneath that low, and now we're pulling back a little bit off of the June's bottom. So how could we trade it? Lots of ways. I want to sell pullbacks. I don't want to sell from right here. Trade location's not very good. So you got a weekly chart. You could definitely be doing something like this. 2-week range. Be looking to do something like that. Maybe a pullback to 43.90. Be a pretty good trade. How about 44.70? Not bad at all. That'd be a very good trade. Very strong trade. Let's go ahead and take a look at the dailies. So the dailies can get us even more aggressive to the sell side. And once again, these are trades. These aren't positions. I don't want to get caught holding shorts gold. I don't believe that you want to short gold for any long period of time. Thinking the top's in, because I don't believe it is. I think we're going back to 5,000 at some point, but it hasn't happened yet. Pull back here on a daily, sort of a spike high there down to this low, this little lower extreme, 43.63, 43.64. It's not a bad trade. Maybe looking for $5 to $7 there. Dial your leverage in 1 to 3% on a given trade. You're going to need to take more money. You're going to need to get a $5 move here, maybe a $7 move, because your spreads are going to be significant. This CFD we're looking at right here is 70. Your spread's 70 pips, something like that. Now, they're going to be denominated a little bit different depending on what brokerage you use. But something like this, if you find yourself running into a big spread, you just have to take a little more money. So, Noku, my view towards gold is definitely shifted towards the bearish side of things, but only from a trade perspective, only an intraday perspective. With regards to the macro picture, still got to be relatively bullish. And the reason why you have to be relatively bullish is because of our monthly chart. As long as we're above 62% retracement, of our current wave, which is relatively simple to find. It's going to be that red bar back in November of 2024. And I know this is a huge wave. Believe me, I know we're dealing with long-term prices, but this was a fantastic zone, and now it's broken. We're still thinking, okay, well, we've got 41.95 down there. That's a beautiful, absolutely a beautiful area. Let's go ahead and mark that on our chart. But what do we have going right now? Well, potentially, we've got some decent pullback zones that we maybe could get involved with, depending on how aggressive we want to be. Something like this. Daily. Yeah, you do have a little bit of resistance right there. Right up in that zone. Maybe 42.22, maybe selling 42.22s instead of buying them as we did last week. Definitely possible. Definitely possible. So I would really encourage everybody to remain optimistic with gold. I think the top side is probably the way to be, but short-term price action, I have no problem selling this, especially if we're trading. Short-term trades, short-term position trades, the short side is probably going to produce a little bit more than the long side will. All right, everybody, that's a wrap for today. We covered enough. A lot going on, though. SpaceX definitely going to be a big one for this week, so I'm excited. We're going to have that live for you. Also, CPI Live on Wednesday. Be sure to, that's going to start about 10 minutes before the CPI number drops at about 8:20 a.m. Eastern. We're going to have a lot of coverage this week, some trade ideas. Also, our newsletter is going to be out a little bit later today, Switch Markets newsletter. If you're a client, you're going to get that automatically. But you can swing on over and register for our newsletter over at switchmarkets.com. And then also we're going to have the trade idea out, the hot picks, the Switch Markets hot picks. We're going to go ahead and have that out. Probably I'll film that later tonight because we got some good price action. I'm not necessarily certain what we're going to look at for the hot picks just yet. To be honest with you, I'm watching the rebound in the NASDAQ. Up almost 2%. There really was no question that you were going to get a bounce out of big tech today. Just because the sell-off last Friday was just sort of incongruent with reality. It really was, to me, it looked like profit-taking and certain investors positioning themselves for this Friday's IPO. All right, everybody, that's a wrap. We went about an hour. If you have any questions at all or any comments, tell me what you think about the streams, or if you have any questions for me personally, head on over to howtotrade.com, open up your free account, click on my picture at the top inside of the trading room, and send me a private message. I answer each and every one of those private messages, so feel free to reach out. And if you do have any questions, that's probably the best place to find me. If not, we will be back tomorrow at the same time, no matter where you're watching here on, let's see, we're available on X, we're streaming on Facebook, we're out there on Switch Markets on YouTube. We're looking at Forex Signals TV on YouTube, howtotrade.com on YouTube. I would definitely encourage everybody to head on over to the Switch Markets on YouTube channel if that is where you're watching. All right, everybody, that's a wrap. Have a fantastic trading session. Big week, week 24. It's going to be a lot of fun. And remember, keep your powder dry. Tuesday, Wednesday, Thursday are going to be primo trading days. And then we're also going to have some good stuff coming our way Friday. All right, everybody, that's a wrap. Have a fantastic session. Have a fantastic trading week. And as always, trade the action well, and we'll talk soon. See ya. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole